Price action or indicators, which is the best for trading strategies? Well, that's exactly the eternal question we'll be discussing on this episode of Better System Trader Live. And our guest today is always insightful, always entertaining, and always challenging the status quo. That's right. It's our favorite rule-breaking Forex trader, Mr. Scott Welsh.
Hey, great intro. Now I'm going to break all the rules.
Well, that's, of course, a reference to one of our previous episodes we did last year. It'd have to be last year on, I don't remember the exact title, but it was rule breaking for more profits or better trading success or something like that. So
Something like that, yeah.
Yeah, and what we did learn from you back then is that you do challenge the status quo. You do like to take all this trading dogma and test it, and you found that not everything is as it seems. And we're going to talk about some of that stuff today, actually.
All right.
But yeah, it's been so long. Here's a fun fact. The last show I ever did, which was very late last year, I've taken a 9 or 10 month break. You're on the show. So it took me all this time to recover. And now we're back. So I feel I'm cleansed. I'm ready to go.
I mean, you look fantastic. So you must have done the right stuff.
Oh, thank you. As do you, of course, as do you. So actually what I was doing today, I was thinking back to that episode. And, one of the questions that entire episode was about, reviewing 2021 and what are the things that we've learned and, what do we think about 2022? What are we preparing for? So it could be quite insightful and quite interesting to go back and review some of your comments. So hopefully you don't mind me dragging some of those up from the mud, putting you on the spot.
Yes. I love the spot. That's the best part.
But what we did do, we started that episode and my very first question was, how would you now I've forgotten the question. That's embarrassing, isn't it? Okay, one word to describe 2021.
One word to describe 2021?
Yeah, so that was the question. Hang on. Wait.
Okay.
Because I've got some notes here.
Yeah, because that's not one word. Go ahead.
I think the word, so we had internet issues back then. I think the word you said was frustrating or annoying or something like that. And then you switched it. Yeah, I think you went with fascinating in the end, but I'm not sure. I think you switched it while we weren't listening. But anyway, what about 2022? I know the year isn't over. We've still got a couple of months, but boy, has a lot happened this year. So how would you describe 2022?
Wow, it was a year of reckoning, kind of. Wouldn't you say?
Yeah.
I'm fascinated. I've talked about it before and written about it, but I'm fascinated by, when you go on YouTube. I mean, YouTube is just what a fascinating place to go to learn stuff. I mean, it's like an endless treasure trove of people legitimately trying to help. But you go on YouTube and you pick out a topic, and I pick out something maybe I wasn't fully up on, and you look, oh, they're doing great. Wow, that YouTuber's doing really great. And then you look and it's like, video was 1 year ago. Video was 2 years ago. And so you go to the next one and it's like, video was 18 months ago. And like, I keep clicking through and it's like, where are the recent videos? And they all disappeared. And that started happening to me in the past several months over and over again. Like, all the videos stopped about a year ago. And well, guess what was about a year ago is when the evil bear market came. And, I'm empathetic. At some time I'm kind of grateful for the cleansing, but things, 2020 was so strange and people got locked down and so many app traders came, and then we had the Reddit stuff, and then we had the GME stuff on top of that as Reddit got even bigger. Then we had the Robinhood stuff. And honestly, I don't know how you felt. It bothered me a little to have so many experts on a market that only goes up. I mean, I was worried the whole time, as I've been worried about Bitcoin buy and holders for a long time. And you see what Bitcoin's doing tonight. It's down in the 15s or whatever. So 2022 showed people that whether it be option strategies or simple day trading strategies or buy the dip strategies, I mean, they just are gone. I mean, and yet, strangely, the old strategies, the boring strategies, the stuff that worked 20 years ago, 40 years ago, 50 years ago, I wonder how that's been doing in 2022. Actually been doing quite well. So I think it's a lesson against hubris. It's a lesson against be humble. But 2022, not that it hasn't had its tough times. It's had so many reversals and so many things happen. But if you're not, if you're a trend follower, let's just put it that way, should be doing just fine.
Yeah, yeah. So I've just lost all my screen, so I don't know if you're still there, Scott. Are you there?
I'm here. Yeah.
You're there? Okay, so something's going on from my side. I'll just keep talking, and hopefully they'll come back. So, yeah. So, so you've already touched upon a little bit of what we're going to talk about today, and obviously the title of the show is Price Action versus Indicators, which is King, which I think actually I stole from you. So, without your agreement, so hopefully you don't mind.
I'll sue you, but I'm fine.
I thought it might be good to ask while everybody's watching, so that you're not going to blow up when millions of people are watching the show today. So, but I think before we get into that, and you've got some interesting research and some insights from what you've been watching this year, I mean, indicators are pretty self-explanatory. I don't know if you want to, explain what do you mean by that. But what about price action? That's kind of a broad term, and I suspect people have different ideas about what price action is. So can you explain, what is price action in your view?
Yeah, and that's, again, I love it when people get into arguments and nobody knows what they're actually arguing about. It's so funny. Like, people get off, they start screaming, and they're not even arguing the same thing. Price action is working just fine, contradicting our title, if we're talking about breakouts, right? Okay, so we're talking about the breakout of the 40-day high. We're talking about the breakout of the 20-week high. That is when price breaks above price. I mean, that's price action. Right. And that honestly has been fine. There's been some ups and downs. There's been some drawdowns. I mean, there's been some reversals. Breakouts have failed, obviously, at times during 2022. But that sort of price action, that's never going to go out of style. It's always going to be fine in some way or another. Not that there aren't drawdowns and all that, right? I guess what I'm speaking about are, and what I have found to be not as effective, is maybe like a candle pattern, all right? A doji with an engulfing, or, a hanging, whatever they're called, right? Haramis or that sort of thing. I wonder about. Or specific patterns, even, I'm gonna buy this when price goes down to this moving average, and then it makes a doji. Anything that's very much inside bars, key reversals, any of those, I think, again, I'd have to do my research again, so feel free to correct me if I'm wrong. But those types of things, I think I've gotten steamrolled in many because a doji comes and then here comes a news event and it just gets steamrolled. But I find those in general, dojis and that, all the testing I've done, none of those are as sticky as, say, indicators, for example. An indicator reading tends to hold up and produce more than just some sort of price action interpretation. So is that clear? I think that's what I'm talking about. I hope that's what you were thinking.
Yeah. But what about chart patterns? I don't think I heard you talk about chart patterns, but things like wedges and what's the one that goes like that? Head and shoulders and those kind of things. You talking about those kinds of price action too, or just really the basic stuff like candlesticks and breakouts?
Oh man, those are tough. I mean, that again, we have to be very specific.
Yeah.
Cup and handle works.
Oh, okay.
Cup and head and shoulders works, right? And I just saw there's a great video actually on YouTube. I honestly forget, I should give credit, but they did research. There was a third-party company that did research on all these chart patterns, and the most reliable was head and shoulders of all things. Cup and handle was second, and a few other things, did moving average crosses and whatever. And they called it reliable. Now, here's the problem. How are we going to define a head and shoulders? That's the problem, right? If I'm like, well, it's kind of a head and shoulders, and is that my neckline? And then you have to define on top of that, well, what's profit? Is it 1 time the neckline, 2x, whatever? If we start arguing on what is a head and shoulders, then I'm not on board. But if you and I can sit here and say, yes, we both agree on this pattern. Now let's see if it works. I think there's something to that. But let me make a caveat on that. It better be a daily or a weekly chart, because probably it won't hold up on a smaller time frame. But there is research out there. I don't use it, and I haven't researched it. All the research I've done, I've never researched Head and Shoulders, that sort of thing. But there is documentation out there, so I can't cut it down too badly.
Right. Okay. So how about we just dig into more of the results-based research you've done? Because I know I've been watching your email list for a while. It's always very entertaining, and I know you've got some examples for us to kind of show us the types of strategies that have been working recently. So should I pop up the slides, or do you want to do a little intro first? Because okay, let me get the slides up here. If this works, excellent. Of course, there's a disclaimer. Do you want to?
We're showing numbers, so understand these aren't live trades and blah blah blah.
Yes, exactly. All right. So, you mentioned basic strategies quite a lot in the episode we did at the end of 2021, and I want to bring up a question about that a little bit later, not just yet. But so I know you've got an eye for these kinds of basic strategies, and we've kind of touched a little bit on them already. So, do you want to explain some of the types of basic strategies you mean? And I know we've got some results here that we can share as well to indicate what's been working and what hasn't.
Work from the beginning to backwards.
Right.
I have strategy. I keep strategies for years and years and years. I have strategies I started building automated strategies in 2012, and I really don't throw anything away. I just keep it running in the background, or I just check in and I pop it on my chart, and then I run a 10 or 20 year back test or whatever to see. So I'm always watching, and I periodically, as part of my free time, I go back and look at the oldest strategies I can find and say, how have they been doing? Furthermore, I like strategies that were simple when I did it several years ago. So we've got a simple strategy that's been around for decades, and then I personally tested it many years ago. So it's like old on top of old, and then I get very, very interested. And some of those we're looking at tonight are, for example, the 3 moving average cross, right? Who hasn't heard of the 3 moving average cross? The fast moving average is above the medium moving average, which is above the slow moving average. When all of those moving averages are together, guess what? That's a bullish trade and reverse for short trade. People have been studying that for a long time, since I started studying trading. So I built a system. Again, I don't even remember the year. It had to be 6-7 years ago. And then just don't do anything with it, and I check back in on it. Well, I've done more than check back in on. I'm actually tracking it now. I'm tracking my website, and I'm updating it every month till the end of time because I'm curious. But that's an example of, it's just built to follow the trend. It's not going to be perfect, but guess what works in a bear market when there are trends? Something that follows a trend, right? So that's something that's really, really simple. And, a part of me thinks it's old, it's stupid, and everyone always tells me strategies break, and I'm like, do they break? Because maybe they don't. So anyway, that's my little rule breaking methodology. I think maybe things can last kind of forever.
Wow. Okay. Yeah, I think you're absolutely right there. That people they kind of discount these simple strategies, and there's all types of reasons. One of them is that the market's moved on; it's more sophisticated. There's a lot more noise, and these old techniques don't work. But I think, as you're going to show us, surprisingly, maybe we should watch the way we think about those kinds of things. So,
well, honestly, too, and before we get into it, people say the old turtle strategies don't work. I've read many articles for old turtles, and then I test them myself, and they work fine. Like, what are people talking about? I don't know what they're talking about. But anyway, let's get to the slides.
Do you think maybe that's because people have a different expectation of how a strategy should work? Or, I mean, there must be some kind of underlying thing that people say, well, that doesn't work. Well, maybe it had a poor year, but over the long run, I think maybe that's...
There's a reason you have a podcast and a live show. That's very, very good. Yeah. If you think because we have technology now, that we can make systems that win 82% and our winners are twice as big as our losers, and there are no losing years, and you look at a turtle strategy that has a losing year and you say that doesn't work, yeah, I get that. But you're right, the expectations are out of control, right? Nobody does this for an index fund. Oh, here we go. I won't do it. But you know what? I know. But nobody looks back and they, and last 100 years, the stock market's had, 20 down years. Well, they're like, yeah, that's great. But a trading strategy can have 20 down minutes, anyway.
I promised myself I wouldn't say index funds today because I know you've got a little bit of a bug to bear. So let's move on quick. Everybody, let's move. So, okay, so I've got the slides ready.
Okay, I'm ready.
Now, since you mentioned the 3 moving average cross, how about I pop that one up on the screen first? Do you feel comfortable with that? So, here we go. Boom. All right.
Okay. And several things about this. Number one, there's no stop loss on this strategy, right? And I do give all the exact rules, right? I've decided there's another thing that Richard Dennis said years ago, that he could publish the rules of his trading system in the paper and it would never degrade and people wouldn't follow them. That's kind of what I'm doing. I give all the rules of these simple systems on my website. I'm not hiding anything and I'm not selling anything. I'm just taking these simple strategies and trying to prove what Richard Dennis thought was true and see if it's true. So first of all, there's no stop loss on this strategy, which is crazy, right? It gets in when the fast moving average goes above the medium, right? So medium has to be above long. And when the third one, the fastest ticks up, that's a long trade. And it gets out when the moving average crosses back down. So that could be so many different pips, right? So many total pips. No stop loss on this. So I think that's fascinating. And then you look at that curve and then you look at the numbers. If you're trading this on a hypothetical $10, $20, $30,000 account in 2022, it's up $5,600. So on a $20,000 account, it's up 25%. Well, compare that to the market, which is down 20-ish, right? It's beating the market by 40%, this simple thing. And you can see here also on the equity curve, the actual secret to this sauce. And that is, look at the drawdowns.
Yeah.
And that might be the other thing that people say strategies don't work, is because they like to make perfect back tests. As I think Kevin Davies says that all the time. Don't build the perfect back test. And he's so right that if you don't see drawdowns on your screen, then you're probably not following the trend properly. And it's probably not robust. So you can see on this one, it has monstrous gains. And then it goes through a drawdown when the trends are not there. And then it gains again. I mean, that's how you trade for the long term. So I love seeing these drawdowns. And I've been tracking this since 2021. So that includes when we last spoke. And it was up for 2021 and it's been up nicely again in 2022.
So how much of this this analysis do you think is based on the particular market versus the strategy? Because the pound yen, I'm no forex trader, but from memory, many years ago, it's quite a trendy type of instrument, right? So
yeah. Oh, man, you say important, smart stuff.
I've been thinking 9 months about this, so I've had some time to get that.
But honestly, and this is it's a rant though. I won't go off on a rant. Maybe we can have me rant in the future. But why are you trading a trend following strategy on something that doesn't trend? Like, I don't know. I don't get it. Now I take my strategies and I run them on 20 pairs. Well, guess which one is by far the best? The pound yen. I mean, it's not close, right? The average true range is almost double most, right? Just look at a chart, use your eyeballs, right? Why am I using my trend following strategy on something else that doesn't trend? To be diversified? I mean, why? I'm playing a basketball game. I got 5 guys. Why am I playing someone who's not even on the team? Why am I playing my 10th best player? Why am I not playing my best 5 guys? Like, why, if you're building a business, I'm going to hire people who are terrible. Like, why? Like, why are you not, I don't get it. And I've fallen victim to this. I've traded things other than the pound yen, and guess what? They didn't work as well, and my performance suffered. Like, how dumb am I? I'm dumb, right? But I'm not dumb anymore because I don't trade anything in forex except the pound yen. So yes, put this on, and maybe again back to your previous comment. Put this strategy on the dollar Canadian. You won't see much profit. Oh, the strategy stinks. Does it? I don't think so, right? So yes, I only put trend following stuff on stuff that trends. And if you think that's wrong, okay. I don't get it though. I don't see the logic.
Yep. So the 3 moving average cross is an indicator strategy. Now the price action you mentioned earlier was like breakouts. So wouldn't breakouts also work well in a trending market?
Yes, absolutely. For most of this year, and I'm kind of skipping ahead, but for most of the year,
Yep.
indicators, I track tons of strategies. The indicator strategies have been beating the breakout, which is, I guess, price action. But literally in the last 20, 30 days, price action is roaring back to life, meaning breakouts,
Okay.
nothing else, not chart patterns. So price action has got a little bit angry about our upcoming live event, and it's fighting back. But the indicators, I think, are still
Yeah.
barely ahead. But yeah, but
Right. Okay.
honestly, there's been a lot of reversals on breakouts in the middle of the year, but the beginning of the year and lately, price action has been phenomenal.
Okay. All right. Well, that's the answer. The show's over.
Well, there you go. See you next year.
Thanks for coming, guys. No, you've got some more examples.
Yes.
So how about we look at some of those? Okay. So there was actually one I skipped past.
Okay.
If can I go back?
Oh,
Do you
yeah.
mind if I? What is this one? Okay, master trend.
Yep. Now this is I call this, it's a robot called Master Trend because I have three indicators built into it. Ooh, it's got three in one. So
Wow.
it's my three favorites actually: the Bollinger Bands and RSI and stochastics. I love those indicators. I've loved them since I started looking at trading. So I built a robot that can test any one of those individually, or two of them together, or three of them. All right, it's very versatile because I just love those indicators. And this is just a little portfolio. It's only two things in it, but so it's not kind of a portfolio. But they are just based on you can see the BB on the slide. Bollinger. This is strictly a Bollinger Band strategy. But
What?
most people, at least the way I learned it, was when it hits the top band, you revert to the mean. Well, this does the opposite, of course. When it closes above the Bollinger Band, it's long. And when it closes below the lower band, you go short. It's like if it's getting volatile, go with the trend. Don't go back to the mean. So that's what these two strategies. One of them is a 4-hour that only trades the beginning of the day. And the other one's just a 1 hour that only gets in extreme circumstances. It's got a very, very wide Bollinger Band, 3 standard deviations. So it only gets long when price has already gone quite a ways, right? It's kind of like a breakout, but it only triggered on the Bollinger Band. And this one has had just phenomenal moments. You can see at the tail end, the last 30 days, it's lost a few. But the equity curve is trading both of those together, combining the data as if you traded them in the same portfolio. And honestly, again, if you're on a $20,000, $25,000 account, I mean, you're up super nicely for the year. And the 1 hour is doing great. The 1 hour has been a smooth ride. It doesn't trade a ton because it has to get outside of that big Bollinger Band, but it's been doing great. I mean, these just buying breakouts outside of bands has been really nice this year.
Yeah. So that last little period there where it's in drawdown, is that the reference you made to price action is kind of coming back a little bit recently? Yep.
Yeah, that
Okay.
tail end down, price action is doing the opposite. So yeah, the
Right.
whole year, literally until last month, indicators have just been trouncing price action, at least in my little world. But yeah, there's been a little bit of pullback. Yeah, because price action also stops and reverses. I mean, it really follows the price. Like if it breaks out one way and then it breaks out the other way, then you stop and reverse and go the other way. Whereas the indicators are like, nope, this is my signal and I'm taking it till it's over. And with some reversals, but really, really powerful reversals, meaning they've gone the other way and then gone a long way, that's led to stop outs and indicators and big wins in price action. But I mean, I think indicators overall are still up.
Okay, Scott, we're having some internet connection issues.
Okay.
So we lost the slides, so I'm going to bring them back up in a minute. So we've just covered a Bollinger Band strategy and a triple moving average. They're very basic types of strategies. What other types of strategies have you tested?
I've got a strategy based on stochastics, and it's my new little pet project that I'm falling in love with all the time. And that is, I call it the KISS robot, which means keep it simple. It used to be keep it simple, stupid, but I say keep it simple, Sherlock, because I love Sherlock Holmes, anything that's Sherlock Holmes related. So anyway, but I'm thinking about, okay, I'm tired of index funds. So how do I compare that? Well, index funds are easy. You just plop your money in a Vanguard account and you go. Well, how could trading be simple. And so I said, okay, listen, I'm going to make a robot. I'm going to take out all the inputs. Like there are no inputs, right? They're in the background, right? I've programmed them in, but literally the only input is how much do you want to risk per trade? That's it. So keep it simple, right? And so there's nothing to tweak. Like when you go through a drawdown, there's nothing to look at, right? There's just nothing to do except, well, just keep going. And I've just let that one run. But it's based on the stochastic indicator. And when the stochastic goes over bought, meaning it goes up, then you buy that breakout, same thing. And when the stochastic indicator goes over sold, you sell it. And that's had a phenomenal year just based on, and it's been I risk 5 to 7% a trade, which is, we can also hit on, we talked about the Kelly formula, and I was so fired up, and you were skeptical, you were nervous about it because and Kelly has been working great, by the way. So
how has it? That was on my list of things to ask you for later.
I'm spitting my tongue out at you. Anyway, but that's what this one does. It just says risk per trade. So that was, again, totally indicator based. It does not stop and reverse, but there are no inputs. I mean, and it's been doing great, honestly.
Wow. Okay. Simple. I can see, actually, I've got your slides back. So thanks for being patient while I sort out these technical issues.
I've got them all memorized. It doesn't matter.
Sorry, what was that?
I said, I've got them all memorized. So it doesn't matter.
Okay.
I don't need no stinking slides.
They're for me.
I know.
I've lost my notes as well. So, the computer's like, what are we doing? Not this thing again. It's like, we're back.
That's funny.
Okay. So old school. What's old school about?
Right. Old school are typically, first of all, again, it's the same thing we said before. They've been around in my database for a long time, and they're based on concepts that have been around literally decades. Okay. So first we have a simple moving average cross, but it's not a 3 moving average cross. It's even simpler. It's even more traditional. It's just a 2 moving average cross. And you have a stop loss on this one, and you have a profit target, which is rare in trend following, but I love profit targets with trend following. Again, I'm a rule breaker. I'm a rebel. So you have the moving average cross on a 30-minute chart. Seems weird. That seems a little low. I don't normally go that low, but I built this a long, long time ago, again, 5 to 7 years ago. So I've just been watching it, and it's honestly done very nicely over time, and it's done okay. It's positive for the year. It's drawn down a little bit lately, the 30-minute strategy, but that's just a simple moving average cross up and a simple moving average cross down. It's got a time exit. Again, all the details are on the website for free and everything, so you can look those up. So that's what that one is. It's just a moving average cross, but I've combined that with, look it says turtle on there. A turtle strategy. Years ago, when I read all the good books about the turtles, Michael Covell, when all of his trend following turtle books, I just went and had a programmer build it. So that's strictly breakout, right? So again, we're talking about, is it price? Is the price action? Kind of. But just for comparison, of all the strategies, and when we talked about which is better, indicators have far more doing better. But the number one in 2022 that I track is this 60-minute breakout of the pound yen, breaking above a high on a 1-hour chart. I mean, it's just been destroyed. I mean, look at it. If you had a $20,000 account, for example, I mean, it would hypothetically be up, almost 60, 70%. It's crazy. And then you have the turtle, again, another indicator or robot based on just the breakout on a 240-minute chart. And I built this again years ago, and that's also doing well. So straight breakouts have done just fine, but you can see on the equity curve, look at those. I mean, 2 of them just right near the end, even though the overall results, you look at the numbers. I mean, if you're trading a $20,000, $30,000 portfolio, these all add them all up, and 24K hypothetical money. I mean, it's huge, but they're drawdown. Look at those drawdowns, right? So yeah, in the reversals, that's when price action suffered. But like I said, you can see as it's piled upwards in the end, price action has in the last 30 days has made its case. But those are just straight breakouts, profit target, stop. Some have a time exit, some don't. It's just as simple as can be based on the turtles. Turtle strategies don't work. Well, I don't know. I
Until they do,
I guess. But,
yeah. And I know you've got another slide here, so maybe we'll do this, and we've got some questions in the chat for you as well. So
all right,
we'll go those ones in a minute. The Dragonfly.
The
What a good name.
Dragonfly, yeah. Yeah. This one actually is the only proprietary one. So boo. I hate talking about strategies. I give so many away. This one I don't give away. But you can see right at the end to the right, it made that that cup. That's when all the reversals and price action was just doing terribly. But again, as I mentioned, last 30 days, the trends have gotten fierce. And Bank of England has done things, the Bank of Japan has done things, and when you have chaos like that in the 2 pound yen that's in the pound yen, you get big trends. So yeah, indicators were destroying it when you see that trough there, that last trough. Indicators were way ahead, but then you can see it's really poured it on lately. Price action has come back. Now we don't have a slide for it, but I have a master trend that's very similar to the Dragonfly, but only uses Bollinger Bands. And it's doing actually a little bit, it's either equal to this or a little bit better. It's been beating it all year. So, again, it's 6 in one half dozen in the other, but more indicator strategies have done better overall than price action, even though we've seen a resurgence.
Yeah. So in your review of all these old strategies and perhaps even some newer ones, has there been anything where you thought it would work well and really surprised you that it didn't?
Yeah, I feel like of all the big three that I mentioned, my three favorites. Since I started trading, RSI has been my favorite. You can make counter trend strategies that work. I've spent hours building that. I like RSI generally as a trend following. Again, buy when it's overbought and sell when it's oversold. RSI has just been okay. It's been way behind Bollinger Band. Bollinger Band's been the #1 indicator of the year by far. Stochastic's #2, and RSI, it's been profitable. It's been fine, but it's lagged, and that surprised me. I would think relative strength in a year that's full of strength and weakness and strength, I thought it would do better, but it's just been okay, and it's been fine. So I thought that was a little surprising.
Yep. Okay, well, maybe I've got some more questions about your results, but how about we'll answer some questions in the chat here. So we've got a couple of good ones here. First up is Ola. Good to see you, Ola.
Isn't she a regular of yours, right? Isn't she always here?
Oh, are you thinking of Olga, maybe?
Oh, maybe. All right. Well, I hope so. I hope Ola's always here.
Would you first determine the market is trending and then apply trend following strategies, or would you track how trend following strategies are working and apply them where they work?
Here's how I do it, and you can find your own way. Do your own thing. Like if you trust someone and like what they say and their stuff works, then take some, right? Steal some ideas from me or anyone or Andrew or anyone else. But here's how I do it. Okay, I take a trend following strategy. So let's say it's a Bollinger Band breakout. Right, so it breaks above the Bollinger Band, and then you buy it, and then you go for a big target, whatever that may be, ATR, whatever. I will then take that idea and then go find things that trend. So if I have that idea, I'm going to go right to the pound yen, right? Any good idea I have, I go right to the pound yen. How does the pound yen? And if the pound yen doesn't produce profit, then I think that's a pretty poor strategy, because you should be able to figure something out with the pound yen, right? I just feel like, right, a basic trend following strategy should be able to make you money as long as you can handle the losing, which nobody can. But anyway, so I would take that and I would look at gold, look at silver, look at Tesla, look at QQQ, look at TQQQ ETF, like all these things that trend like wildfire. I would take this simple strategy, and then if I do see the results I like, then I might start breaking it down and maybe doing a little bit of optimizing. But I have the idea first, and then I try to go to the usual suspects that prove whether it's really a good methodology.
Okay. There's a question here from Neil. You kind of just touched on it a little bit just then, but I'm sure you could expand a bit more. Here we go. Thanks for the question, Neil. So you made a statement, only trade trend following strategies on instruments that trend. Sounds like a circular argument. How do you determine what trends if you're willing to have losing years and 60% drawdowns?
Well, it's great, and you have to be very careful. There's I had a philosopher as a tennis coach in college. He was the head of the philosophy department, and he said something very wise, and I'll share it with you right now. And that is, nothing can be proven to the person who thinks nothing can be proven. First of all, okay? And there's so many comments and videos and arguments against videos and claims and counterclaims, and people honestly like to sit around and say, well, you can't determine a trend, or I don't know what value means, and they sit around and they argue instead of just put something on a chart. So be very, very careful. Always question, but then verify. And I don't think people get to the verify part. So be very careful with this question. How did I come to the pound yen? Well, 2008, I was listening to a trading webinar, and the instructor said the pound yen is the hardest trending currency pair in the world, one of the hardest trending instruments. Okay. So I said, that's interesting. And then I put a trend following strategy on something that anecdotally said trends, and lo and behold, okay, but maybe you don't hear an anecdote. Okay, go to the daily average true range of all the currencies. Which one has the biggest one? Right? It trends. Or if you're looking at stocks, when is Apple going to stop trending? When you're a $1 trillion company, you're supposed to stop trending. Apple has not stopped trending. When is Tesla going to stop being trend? When it goes to zero? I mean, I'm not saying it's going to zero, but I'm just saying, when is Amazon going to stop? Right? I mean, these are all anecdotes, and you can just go check it out for yourself. When is gold ever going to stop making trends? Silver. When is Bitcoin ever going to stop trending? And when it goes zero? Oh, I didn't say that. So, don't get caught up in, it's circular reasoning. It's not really, right? It looks like it. Look at a chart, right? Or you know what you can do? Take a basic trend following strategy, 40-day breakout, 20-day trailing stop, and put it on 406 different things. Guess what? The ones with the most profit are the trendy ones, right? And how do I know they're going to be in the future? If they trended in the past, they're probably going to trend in the future. You know what the number one selling chewing gum was in the world? It was the same one it's been the last 50 years. Snickers bar is number one every year. Coca-Cola is number one every year. If you find something that trends, it's probably going to trend. So that's a long answer, but it's an important one, I think.
Yeah, that's a good answer and a good question. Thanks, Neil. And Bill also actually asked, how do you determine trend? And I think you just covered that one quite nicely. So, so back to the research that you just shared with us and those basic strategies. Does their recent good performance this year, considering everything that's happening in the markets and outside of it, those being profitable, does that indicate that it's a robust strategy for the future, or is it just luck?
And I love that question. Again, that's another podcast we could do a half hour on. I personally am very, very wary. There is a trader that you've had on the program that I think is phenomenal. I think he's top 5 best people I've ever heard speak. I mean, you have so many good guests over the years, right? But he loves strategies that literally have only worked for the last 12 months. And he's fine with that. Okay. He's like, well, it'll stop working sometime. Like from 2008 to 2021, it loses money. But in 2021 and 2022, it is just like a NASDAQ strategy, for example. And I say, make hay while the sun shines. Absolutely fine. Right. But for me, the thing that I look for, if it does well in 2022, in my opinion, it's going to work for years and years and years. Well, why is that? Because it's worked since 2003. Right? I don't trade anything that hasn't shown 2 decades worth of persistence. So even though 2022 was weird and 2021 actually was weird, but a strategy survives both of those, I don't think it's an anomaly. I think it's robust. So for me, it's how long has it been working? And if it's been working a long time, I'm fine.
Yeah. It's interesting you mentioned 2021 because I happen to have a slide here from 2021 that our last show. So I'm going to bring it up and let's see.
It wasn't me. I wasn't even in Vegas that weekend. All right.
So this is your exact slide from our previous discussion in December 2021. And one of your key points was old strategies do very well. So sounds familiar. Here we are, almost a year later, saying the same thing. There's no way an old strategy could have been ready for 2021.
Nope.
you could probably say that for 2022 as well, right?
2022, I think, was worse. Yeah, I think 2022 was crazier than 2021 was weird. And I think the easiest way to sum up how weird it was is that 2021 in the stock market was a bullish year, right? It was up.
Yep.
The majority of the stocks in the S&P 500 were bearish. I mean, it was like 60 or 70%. And again, look it up. Don't hold me to that. But it was way above 50%. Stocks were under their 200 period simple moving average. It was a bearish year, and the stock market went up. Why did it go up? You know why. Tech stocks, right? Tech was way up, including Tesla, and the stock market. Oh, it's a winning. 2021 was a bear market that went up, right? For all intents and purposes. So that was weird. But 2022 is when, the bottom fell out. It has been, a bear market that we haven't seen since 2008, except, not as much fear as 2008, but just as violent. So yeah, 2021 was weird in that it was subtle. Like breakouts wouldn't work. Like it was subtle. 2022 has been more in your face, but there have been so many events, and then you add midterm elections there in the US, which tend to affect the markets. And there's just been so many things happening. So yeah, there's no way, the slide says no way we could have been ready for 2021. There's no way we could have been ready for 2022. And yet.
And is there any way we could be ready for 2023?
Yes, we're perfectly ready for 2023. Yes.
Okay, good. What I find interesting about this slide, though, is that if you look at the bottom two lines, there's our good old 3 moving average strategy and the turtle strategy.
Yeah.
Which is, so here we are a year later and you're still talking about them.
Yeah, and the numbers are pretty similar, aren't they? Isn't that crazy? Yeah, I know. I've been tracking them since before we talked and before we put that slide together. Yeah, it's weird. And honestly, I did when stuff started happening, especially early in the year. I thought, I did worry about them, but then the trends came, and it's like 2022 has been great. There's been no problem at all. So, what do I know? Quit being afraid.
Yep. Now I just want to dig into the luck, the role of luck in trading. You were going to say something, and I was trying to remember it, and now it's completely lost. But it sounded like you were going to go down the path of the role of luck in trading. So, do you have any comments about how luck can have a role in trading results? And can we manufacture that? Can we engineer it?
Yeah, exactly. And again, I think I sent it to you. We've talked about it before. One of my favorite sayings is, if you're dying for a haircut, just go sit at the barbershop every day, and eventually you're going to get a trim, right? That's life. For example, and I use my tennis example, as we know, I used to be a tennis pro. If I want to coach the best player in the state or the best player in the Midwest or whatever, how am I going to do that? Well, the next time that someone walks in the door, that would be so lucky if that was the one. Like my first day and she shows up and she's the best, right? And makes me famous, right? That's luck. However, if I'm there every day, 10 hours a day, I never leave the club, I never leave the court, I try as hard as I can, I look nice, you know what I mean? I'm ready, I'm responsive, and I do that for 3 years. Am I going to find a prospect? Yeah, right? I'm manufacturing my own luck. I don't know when it will happen, but I know if I just keep persistent and I do good work, it's going to happen. Okay, what does that have to do with trading? If you have a strategy that follows trends, and it's followed trends for 20 years, it's luck that 2022 worked, right? But if I am there every day in the market via myself or via my robot, if I'm there every freaking day, today might be the trend. No, it isn't. Today might be the trend. No, it isn't. Today might be the trend. Holy, right? So it's luck, right? If you caught GME in 2021 for 1,000,000%, that's luck. But I have so many strategies that would have been GME, like basic trend following, moving average strategies, or just straight breakout strategies. And they all would have caught GME. So if you were trading GME every day since 2018, you would have gotten lucky, right? I didn't. I wasn't trading stocks at the time, right? But if you want to be lucky, be there every day doing something that's valuable or doing something that's important. and eventually you'll get lucky. Like it's almost inevitable.
Yeah. So then, so how many strategies do you actually monitor? To see how they perform over time. What ballpark?
Oh man. Well, I sent out to members a spreadsheet, and I think that was between 20 and 30. And that is back testing going back to 2003 and tracking it. There are a lot more than that. I actively track. So let's say that's 30 or 25. I actively track those. And then I just did it today, as a matter of fact. I just go down my list of strategies. I'm like, oh, I haven't looked at that in a while. Boom. And I just did that today. So let's take that up to 50 maybe, right? So, and that's just Forex. Then you've got future strategies, which I'm delving into, stock strategies, which I'm falling in love with, especially because the bear market's here. When that turns, I'm going to be there, right? I missed all the other bear markets. Or bull markets off of bear. I'm not missing this one. So, add up those strategies. So we could be getting to 75 to 100. I feel like that I've got my hands on pretty regularly. I kind of like to know what's going on, and this trend following still working, or why is this trend working, or why isn't this trend following strategy working? But by and large, like I'm very rarely disappointed lately, and I think that's great. But I'm a little surprised by it. I expect, like we've talked about, I expect degradation, and I'm not seeing a ton. That could happen tomorrow. I don't know, but so it's quite a few.
Yeah. So out of all of those strategies, then how many do you actually trade live?
Andrew, I thought my agent told you not to ask me this question.
No, it's linking back to the to be lucky, you've got to put yourself out there. So I was thinking, well, if you're monitoring all these strategies, how do you determine which ones you're going to trade and which ones you're going to bin? So,
oh yeah, great question, Andrew. Great question. I
thought it was, but maybe not.
I wrote a post about 4 or 5 weeks ago, and I really tracked 14 different strategies. Like I look at constantly 14 strategies that I would like to trade tomorrow, right? And I looked at all of the 14, and then I have the ones in my live accounts, and every single one. To cut the story short, I'm trading the least profitable one. Okay, at the time. So I could have been trading 14, and I picked number 14 in my live accounts. Now, I was profitable, but I had other strategies that are like up 50%, up 70%, up 100%, and I'm up 30. And I'm like, and I was, I think I even made a video about it, and I was whining and feeling sorry for myself. I wasn't really. But the biggest problem for me, and this is an excuse, so feel free to mock me. Everyone, mock me, because I deserve it. But in the United States, you have to set up a separate account, because I only want to trade the pound yen. So I would literally have to set up 14 different MT4 sub accounts. I'd have to upgrade my VPS and pay, a couple $1,000 a year. I'd have to separate 14 different charts. I'd have to get 14 different settings. I'd have to monitor all those, even though they run by themselves. And it's a lazy, whiny, stupid excuse, but that's why I don't trade 14. Now that's changing. I'm going to trade at least 6 of those 14 live. And so when I hit rock bottom and I had to go to counseling, which is sitting in a dark room by myself looking at the walls, I said, I'm going to move it up to 6, right? And then the 2 that I trade started going crazy good. I trade 2 versions of the same thing, and and lately the last 30 days, they've just been phenomenal, and they've caught up. So I don't have 6 going yet because they're doing so well, but I'm going to start doing that. I can't believe I haven't, and I'm an embarrassment to life.
So embarrassing. I can't believe you admitted to that. Now we got we got a comment and a question in the chat, and then I think we'll start wrapping up for today. So Chris, good comment here. Thanks, Chris. Luck is where preparation meets opportunity.
Happens to be true.
I had a friend like that who used to, when we went out drinking, would ask every woman in the bar for her phone number. We thought he was lucky, but I guess that's a law of large numbers, right?
You can still get 100 no's, but yes. But yes, And honestly, yes. They say the people who know, if you want to get 3 dates, ask 100 girls out, or whatever. Right? Yeah, anyway,
You're giving away your stats now, Scott.
I know.
A question here from Bill, or second question actually. Some of your strategies don't use stops. When will you find a strategy stops working?
And that's tough, right? Because trend following strategies have to have drawdowns, right? Here's the easiest thing and the wonderful thing about trend following, because this is the eternal question. You see any trading talk, and it's how do you know your strategy is over with, right? Here's how I know a strategy is over with. Two main things. One is boring and one is cool. The boring one is, what's your max drawdown and are you above it? That's a problem. Okay. But that's the boring answer. It's effective, but here's how I know. I look at the chart and, oh, wait, there is a huge trend and my strategy didn't catch it. If my strategy is not in, when I see a move like this, then my it's not. I don't care about the drawdowns as long as it's catching every trend it's supposed to. So that's the cool thing about trend following is there's not much to monitor. You look on the chart, is there a movement? Am I in it? And as long as I'm in the big trends, I can make it through any losing streak because I know the trends are coming. It's when I start missing trends, well, maybe, my indicator was over optimized or whatever, right? If I'm not in a trend, it's broken and I need to fix it. Then that's the easiest way. And I think that's pretty cool because it makes sense.
Yeah. Okay. Thanks, Scott. So I guess just to wrap this up then, the title was Price Action or Indicators, which is king? Which is king, Scott? Which is king?
Well, we're 30 days ago, right? It's now October 1st. Not even close. Indicators in 2022 are better. It's not even close. Okay, fast forward to November 1st. Indicators are still winning, but it's much closer. It's close. Yeah, it's much closer now.
So then what's the underlying lesson then if we can't pick it and it depends what's happening? First of all, what's the key takeaway?
Well, key takeaway number one is stop saying bad things about indicators. You see indicators get trashed. It's like indicators are great. They do. They're great. Yeah. Especially if you use them to follow trends, right? Now, the constant complaint is RSI goes into oversold and you buy it, right? Waiting for the reversion of the mean and it stays oversold and I lose all my money. Indicators stink. But if I use indicators for trend following and they work great. So that's a big takeaway. And number one, the overall takeaway though is just follow trends in chaos, right? When everything's going one way, all these strategies work. But when chaos hits, when you see big reversals and big movement, nothing does it like trend following. Follow trends. If you're worried about chaos, follow trends, right? That's the huge takeaway for me.
Yep. All right. Well, thanks, Scott. So where can people learn more from you? I've actually got a slide here. I'm just trying to get it up on the screen.
Yeah, it's just scottwellstrategies.com.
There we go. There's all the places.
Yeah.
So we'll leave that up on the for a moment. All right. Well, thanks today, Scott. Really insightful and entertaining. And what was the third one I said at the start? Challenging the status quo. Oh, handsome as well. That's the one I forgot. I'm sorry.
Yes, thank you.
So any closing words before we wrap up?
No, it's great that you're back. I just love talking with you. It's easy, it's fun. You ask great questions. You do a great thing. You were missed, so keep it up, and I hope you're refreshed. And thank you for thinking of me. I love being here.
Thank you, Scott. Thank you very much for the kind words as well. We got some good. Let's finish up here with some thanks from the chat. Oh, it's moving to quick. T-Bone, great show. Thanks, T-Bone. Neil. Thanks for the question, Neil. Thank you both. Chris, great show. No, he said thanks, gents. Putting words in Chris's mouth or his fingers. And one more to finish up. Ola, great and fun session, guys. Oh, and we've got to include Bill too, because Bill had some great questions today. So thank you, everyone, for joining us. And now I've got to figure out how we wrap up the show because I can't find the video. So we might just do a wave and a thank you. Oh, by the way, if you enjoyed the show today, please give us a thumbs up on the video, a like, and don't forget to hit subscribe as well. You'll be notified when any new content is released. So thanks again. Thank you very much, Scott, and all the best. Happy trading.
See you later. Happy trading.